So is it really a good time still to buy single family properties? Stay tuned for our answer in this week's Rental Property Cafe. Hi, I'm Veronica Woods from Daniel Woods Real Estate.
And I'm Cynthia Meyer with Real Life Planning. Today, we're going to talk about a question that both of us have been getting a lot from our clients, which is it still a good time to buy a single family home? A lot of folks have made a successful investment portfolio in real estate starting in the last recession, buying single family homes and renting them out largely to families. That's what we did in our rental property business. And we moved on over time to small multifamily properties. What do you think, Veronica? Is it a good time to buy a single family home?
As a professional real estate advisor, I get questions on both ends of the spectrum between multifamily and single family. So from some of the hardcore single family property investors, there's some fear about leaping into multifamily because it's unknown. And then there's some people who maybe are starting their journey and they have in their heads that single family is too slow. They want to start in multifamily and they think single family is the wrong way to go. So my perspective is it all works. I'm also an investor myself. I own both multifamily and single family. And I manage properties for owners who own both. By far, the people who are making the most money in terms of cash flow have a combination. Where I come from is that it all works, but you have to evaluate the individual investment. However, I would say this is still really a good time to invest in single family homes. I know we're going to get into that more on our benefits of still investing in single family homes on this show.
A lot of my clients are still in the building stage of real estate investing. They're actively trying to acquire new properties over time. They save their net cash flows from their current portfolio and then they use it as a down payment. They also borrow against their current properties or refinance to try and build their portfolio and build their number of doors. I have seen that there's a lot of skepticism on the single family home front. People with cash are looking for deals, perhaps in their current market, but I'm encouraging folks to think outside the box a little bit. So I guess that brings us to our first point, Veronica, if you want to kick that off.
I get the skepticism too. I would say they're discouraged. They're discouraged because as we're recording this podcast, the real estate market is really hot across all different asset classes, just in general. But one thing has been true is that demand continues to be strong. As an investor, you have to think about where is the opportunity. Your opportunity is to create a product, put it on the market that you have a willing group of people to buy. So it's no different from houses as sneakers. There is a demand. Are you willing to help solve the problem in markets to meet this demand? There was a Urban Land Institute study that I found. They do this big study of professional investors every year, and they rank people's outlook on different asset classes from commercial to residential. And the number one bullish asset category was single family rentals. And that was no surprise. I think a lot of the mom and pop or smaller investors should probably follow the lead of what the larger investors are thinking. So that's one factoid that kind of across the market, people are bullish on single family rentals.
The Joint Center for Housing Studies at Harvard University recently put out a statistic that 400,000 net new renter households will be added annually every year over the coming decade. So there's an increase of the number of people looking for rental housing. When you have kids, you tend to want to live in a single family home in a good school district. So those are always going to be attractive as a market.
Beyond that, there's still going to be a portion of people who are just not mortgage ready. So that's like a term lenders use in terms of people who are making the right income, their credit score. You need to have a certain level of financial health to be ready to buy a property. What I've seen from working with, let's say first-time home buyers, people on the bubble right now who could only qualify for an FHA mortgage, they're really going through hoops right now to qualify for a mortgage. Some people are just falling out. That means there's going to be some people who just have to rent. It's not even like a life preference. In certain markets of working class people, they're going to have to rent. They're looking for capable landlords who aren't going to be slumlords. I would say some of the local towns in my area, I manage properties in the Philadelphia area, in the suburbs as well as the city. I know that there is a shortage of capable landlords who are going to follow the rules of health and safety and provide adequate housing for families. That's something that's important to consider.
As a parent, I can say families need space, right? The single family homes that we have, or the duplexes that are large on both sides, have been consistently rented since we bought them. The activity during the summertime when people want to move so they can make sure maybe they keep their kids in the same school district, or if they're moving them to a new school district, to get that done in the summer break, there's always going to be high demand.
The other thing, sorry, I just have like a few more points about the demand to talk about in terms of another thing that people mention is they feel like they're competing with first-time home buyers. I would say, I wouldn't think about it that way. I would think shift the paradigm in thinking that the average first-time home buyer who's cash strapped, and just think of this person, they're cash strapped, they have to buy a property that's really close to move-in ready. Property that's close to move-in ready, the numbers probably aren't going to work. They wouldn't have worked 2 years ago in terms of what you're putting into it and the rental rate. So that means you're really going after the property that needs a little TLC. First-time home buyer, they don't want to put in the work. They don't have the cash to put in the work. A lot of times they're discouraged from their lenders of getting a more complicated type of loan. So you are really competing on not the full segment of starter homes, but the ones that kind of need a little work. Now, I would say the ones that just need paint and flooring, there is more competition for those because everybody wants like a layup. But I do think there's still opportunity in the houses that maybe you can't get a regular mortgage in order to purchase.
That's a really interesting point. And about a third millennial investors are looking to invest directly in properties, according to a recent bank rate survey. These folks have been watching HGTV and the DIY network, and they have visions in their head of maybe buying a distressed property and putting a little love into it, making it beautiful, but hadn't really thought through everything that it takes financially to make something like that happen in terms of liquidity. There are different ways that you can buy single family homes. You don't necessarily have to buy one at a time, although for a starter investment, that's probably what people are going to do. You can buy portfolios of single family homes. For example, there are many retiring baby boomers who are tired of landlording. They are looking to divest themselves of an entire portfolio in a particular market. Investors with capital, there's a big opportunity here. What are you seeing in that space?
I see that a lot. Those people are calling me and asking me, how do I unload my portfolio? Some of them, depending on what their financial position is, there might be more patient to try to price the individual assets, the value the best they could. Some of them, for simplicity, just, all right, there's 10 houses, I want X, so I'm going to take X divided by 10, and they assign that price across the board, and they'll say, hey, you can pick 1, you can pick 10. So there's really some opportunities out there for people who can assemble the cash to almost mimic what you would do in a multifamily. If you're buying 4 houses, 4 doors, technically there's not a lot of fourplexes, they're all 3 bedrooms. You know what I mean? So technically, maybe you could pull together a package of portfolios that is just as profitable, if not more, than a single fourplex.
Many of the listeners, I'm sure, have looked at roofstock.com, where you can search by portfolio in a particular area, and you can see turnkey type investments where the offering is for the sale of the property with optional property management as well. Make sure your own financial capacity, that you run the numbers. We're going to talk a little bit more about this again in this podcast. That mode isn't necessarily for the new real estate investor, but it can be a big opportunity, right? To do that either through a portal or through investment property realtors and property managers like yourself, who may have clients that they can match.
Yeah, I would say even along the lines of the evaluating the opportunity as a package and as individual assets. Sometimes people throw garbage in. There might be, say, 10 properties. So there's 3 dogs in there. And then so they're just trying to shuffle them in with the other one. So you have to be careful and not get excited just because, oh, I get to buy a pack of properties. You still have to evaluate each individual one. Just because there's a tenant in it, that does not automatically mean it's a good tenant, especially in 2021 with different things going on with eviction moratorium. Should be extended, should be not.
Is there a bigger supply of single family homes or multifamily properties?
Yeah, so the third thing just to think about in terms of why single family is a good option as an investment, it's just the sheer volume of the supply. If you're thinking about evaluating real estate in an area, before you look at pricing, look at the housing stock. That's what we call it. How many roofs are there in an area? What's the mix? A more urban area will allow more densely populated buildings or multifamilies. And the more suburban you go, the zonings are actually against having more multifamily buildings. If you want to invest in area A and there's no multifamilies, then if you want to invest in multifamilies, you need to pick another neighborhood. Valuing the housing stock is the first thing. Just for numbers, like in Philadelphia County from January to June year to date, there were 10,000 sales of single family homes on the MLS and 800 multifamily homes. So just by the sheer volume of just opportunity deals to look at, if you're not looking at single families, you're probably going to have to be looking at a lot fewer deals just because of the volume. The story really for the last year or so has been of that housing stock, the number of people who want to put their properties on the market, what we call the inventory, has been low, historically low. Each market has different reasons. 2 big macro reasons are, one, the baby boomers are just slower in downsizing. They aren't putting their homes on the market. Some of it of fear from buying something else, some cost of senior housing options. On the other end, on creating new housing, the builders from the 2008 crisis never have resumed the level of new construction. And this isn't like a new phenomenon, but it's catching up to us because of the storm of the baby boomers a little slower in selling their houses. And that's why we have this supply story that's really pressuring prices right now. It's just, there's less stuff to buy of anything really. But I would say that I still see there's opportunity in niches. I'll talk about the first time home buyers or the sellers that you need to look out for. So probate and people are inherited houses, that they're always going to be a little bit more motivated to sell, as well as people under financial distress. That's where the opportunity lies, as long as you have the financial wherewithal to handle deferred maintenance or the rehab that you may see like magic on HGTV.
I've been seeing a lot with clients in different places or different regions in the country. There are still opportunities, but to bid for the home in move-in ready condition, as you mentioned earlier, they're getting outbid on even with cash offers because there are folks who are looking to buy a home to go and live in as their primary residence. They're willing to bid well over asking price, whereas an investor is not going to be willing to bid well over asking price because they want the numbers to make. But there still seems to be opportunity in different pockets of the country of finding a home that can be renovated up to rental standards and put on the rental market. For many folks, there's still time to do that before school starts in the fall. The fourth point we want to make here, and we always make this point, is that stick to the fundamentals, right? It always depends on your goals as a real estate investor, your risk tolerance, and your financial capacity never forget to run the numbers. As Veronica mentioned earlier, run them on each individual property if you're buying a portfolio to make sure that it all makes sense from a business perspective. Regardless of how real estate is treated on taxes as passive income, there's still costs to carry a real estate investment, and it's important to have a business mindset when you're thinking about making an investment or purchasing or selling a property. I can't emphasize that too much as a financial planner. Really, it's so important to run the numbers and make sure that there's going to be some positive cash flow.
And not be so anxious. Like you said at the top of the show, I definitely have talked to clients who are anxious and they're feeling frustrated. Should I wait? And I would say, don't just do a deal to just be doing a deal if the numbers don't work. I tell people like, hey, I would love to do a transaction right now, but I don't want you to be so discouraged to real estate investing that you do the wrong deal. At the same time, let's be clear, people are still buying investment properties at cash flow every month, every week, every day. So people are still doing deals. It's a little harder to find them, but that doesn't mean that they don't exist. That just means to work with professionals to help you refine your criteria and get the inside scoop that you may not normally get. I know you were talking about an off-market deal that you're under contract. A lot of times those come with having relationships. So if you don't have that, that's something you should be doing in the interim of pulling the trigger on a deal, talking to people who are in the know about various markets.
If in the current market where you're investing, if there really isn't a lot of inventory that interests you, but you have capital available that you're looking to deploy, think about whether or not a different type of real estate investment is appropriate for your goals and risk tolerance and financial capacity and where you are right now. Now, that doesn't mean doing a total 180 and going from single family homes to large commercial shopping centers. That's too big of a jump, but it might be, say, moving from the single family home to the small multifamily, or moving from the small multifamily to a small apartment building. There's lots of options there. They're worth exploring to see what is going to be the best next step for your real estate portfolio personally. And again, got to run the numbers, have to make sure that it makes sense.
Sometimes that might just be going over one zip code. There are lots of submarkets within a metro area, and sometimes just moving a town or two over, you can have a similar entry point. Maybe it's a different type of tenant. There's some people who only think they can go with the type A properties. The ones with the luxury or higher end amenities, that's where the most pricing pressure is. So if you're evaluating where the market is right now, that's not where most of the opportunity is. You might even want to think about another metro area. Maybe there's another market in the South or the Midwest or another part of the Northeast that you might not have considered. Now, I wouldn't do that without talking to people on the ground that you trust and build up a team there. It may be time to consider a long distance investing.
That's right. And that has different costs. Obviously, you can't manage the property yourself. If you're investing in another state, you need to find a great property manager who has a good team of folks on the ground. Thinking through all those options, I know it's very attractive to many clients who live in highly appreciated markets, right? Parts of California, for example, where they're looking to capture some of that appreciation, possibly do a 1031 exchange or a tax deferred exchange into something else, maybe in a different state. It's important to think through all of that process, and there's a relatively tight timeline. So making sure what you want to do before you go ahead and sell the property that you're thinking of capturing appreciation. Anything else you want to add, Veronica, before we finish up for this morning?
Last thing I'll add is be cautious about looking at the prices alone as an indicator of, is this a good investment? So when we're talking about run the numbers, we mean all the numbers. And one very important point right now is that the mortgage rates are at a record low. They seem to be holding relative ground, although people are thinking maybe they'll tick up in the next year. But as of right now, the overall cost of debt service on investment means that your dollar today can go a little bit longer. You can technically afford to pay a little bit more today than you did 3 years ago because the mortgage rates have changed. So that's something just to keep in mind, that really evaluate the overall cost of doing the deal. If the numbers work at the interest rate that you're borrowing money on, it's a good deal.
That's an excellent final point. And it's always a pleasure to talk to you here in the Rental Property Cafe. And for those of you who are new to this video podcast, please go to the end and see our previous episodes that we've posted. If you have a topic that you'd like us to handle, please email podcast@reallifeplanning.com. And don't forget to hit subscribe so that you can be notified of new episodes. Have a great day.